Hi, welcome to Chapter 2. My name is Shri Bergeron. This chapter is job order costing, and we're going to be calculating our unit product costs. So let's first stop and think, why is it so important that we know our unit product costs? So one of the reasons is so that we can set our selling price. Another is to see if our unit price is too high. In other words, is it costing us too much? Can we sell it for as much as we need to in order to make a profit on it? And then the individual pieces of it, what's causing or what's driving that cost up? And are there steps that we can take to make it more cost effective? So knowing our unit product cost can help us answer these questions and many more. All right, so job order costing systems are used when many different products are produced each period, when products are manufactured to order, and the unique nature of each order requires tracing or allocating costs to each job and maintaining cost records for each job. In other words, when we have a job, we can use job order costing. When we have a process, like let's say for example we make Kool-Aid, that's a process. That is a different type of system that we would use called process costing. But when one of these three items are describing our product, then job order costing is the best to use. So what are some examples where we would use our job order costing system? Boeing, when they manufacture aircraft. Large-scale construction would use a job order costing. And Walt Disney Studios, when they produce a movie, they would use job order costing. All right, so how does this work? Well, we're going to have our direct costs, which are direct costs and direct labor, and we're going to assign them to the job. So if we're working on job number 1 and we requisition some wood to make our guitar, some guitar strings, then we add the labor of the person who actually put together the guitar, all that goes to job number 1. Then we work on job number 2 and we directly trace those direct materials to job number 2. So what we're doing is we're charging the direct material and direct labor to each job as the work is performed so that we can tell exactly how much is assigned to each job. All right, so we have these indirect costs. What are we going to do with those? Manufacturing overhead is what we call these indirect costs, and they are made up of several different things like indirect labor, indirect materials, and plant utilities, plant taxes. All of those are indirect costs that we call manufacturing overhead. So what we'll do with those is we'll accumulate them throughout the period by putting them into an account called manufacturing overhead, and then we're going to allocate it to each job. All right, and we're going to talk about how we're going to allocate it, but we're going to just take a portion of it and allocate it to the jobs. So the direct materials and direct labor went directly to the job, and then we're going to allocate the manufacturing overhead. Okay, so how do we accumulate these costs? This is a job cost sheet, and for example, this is making a wooden cargo crate, and it is job number A-143. So we're going to accumulate all the costs for job A-143. And so we've got direct materials, direct labor, manufacturing overhead, then a total cost, and then we'll divide that by the number of units to get a unit product cost. All right, so let's look at the direct materials part. So this is a requisition form. So somebody would fill out a requisition form where they would requisition the direct materials out of the supply closet or wherever they're kept, the warehouse, and put it onto the manufacturing floor, and then they would become in process. All right, so here we have requisition X76890, and it went to job A-143, and it's a description with the quantity, the unit cost, and the total cost. So it looks like we've got some materials worth $116 going to this job. All right, so we would put this to our job cost sheet, and all of this could be directly traced, so it would be direct materials of $116. Next, we would look at the time tickets of our employees, and the employees would have to document which job they were working on. And so they would tell us how many hours they spent on that job, and then we would be able to assign those costs to that job. So this is I am skilled. That's the employee's name here. And he spent 8 hours. His hourly rate is $15, and so that's $120 that we're going to assign as direct labor to job A-143. So we're going to put A-143 into direct labor. Here's A-143, $120. All right, so we've taken care of direct materials and direct labor, and that was easy because we could trace it and we could assign it directly to the job. Next, we need to talk about how manufacturing overhead is handled. So we're going to use a rate. It's called the predetermined overhead rate, and some people call it the predetermined manufacturing overhead rate. But what's important to note here is that it's predetermined, meaning that we have to do it before we finish. And so it's going to be based on estimates. Accounting uses quite a few estimates, and this is one of those cases where they use estimates. All right, so we're going to have something called an allocation base. The allocation base can be direct labor hours, direct labor dollars, machine hours, whatever the business decides is their cost driver for their manufacturing overhead. So the allocation base can vary, and in the textbook they'll always tell you what it's going to be, but in a real business it would be decided by the managers or the CEO. Okay, so we use an allocation base because it is impossible or difficult to trace overhead costs to a particular job. Manufacturing overhead consists of many different items ranging from the grease used in machines to the production manager's salary, and many types of manufacturing overhead costs are fixed, even though output fluctuates during the period. So we can't trace this to the item, so instead we're going to allocate it. So that's why we need an allocation base. All right, so this is our formula. So estimated total manufacturing overhead cost for the coming period will be in the numerator, and then estimated total units in the allocation base for the coming period. So remember I told you we had to predetermine this, so we have to do it before we know. That's why we have to use these estimates. All right, so the allocation base will be your cost driver that causes the overhead, and so that's your denominator. So for example, it can be direct labor hours. So once we divide, we will have our rate. Next, we're going to apply overhead cost of jobs using that rate that we just calculated. All right, so this is an example of us calculating a rate, and we estimate that it will require 160,000 direct labor hours to meet the company's period estimated production level. In addition, the company estimates total fixed manufacturing overhead at $200 and variable manufacturing overhead costs of $2.75 per direct labor hour. So we're going to use this information to first calculate our numerator, which is our estimated total manufacturing overhead. So what we'll say is that it's going to take us fixed manufacturing overhead of 200,000. So we'll just take 200,000, and then the variable portion of that, we're going to add the 160,000 direct labor hours times the variable cost of 275. And so when we do that, and then we add that to the 200,000, then we can see that our estimated total manufacturing overhead is 640,000. So again, that's the fixed plus the variable to estimate our total manufacturing overhead. All right, the denominator is our base, our allocation base. And this one tells us that we use direct labor hours. And we're told that we estimate that we're going to require 160,000 direct labor hours. So our denominator is 160,000. When we divide, we see that our rate is $4 per direct labor hour. So let's see how we apply this. We're going to take the $4 times actual direct labor hour. I'm going to write this here so that you can remember it. We take that times actual base. So for us, actual direct labor hour. And that's how we're going to assign it. So we're going to say $4 times actual direct labor hours. Well, where can we find our actual direct labor hours? We can look at our job cost sheet and see the actual direct labor hours were $8. So for the manufacturing, I said $8, 8 hours. 8 hours times our $4 rate, remember that is our predetermined overhead rate. And so we're going to assign $32 of manufacturing overhead to this job. All right, so we've got direct materials, direct labor, and the amount of manufacturing overhead that we applied. So now we can compute the total cost and the unit product cost of the job, and we'll see it right here. So we just add direct materials, direct labor, manufacturing overhead, and we get a total cost of $268. And then if we want to know what the unit product cost is, then we'll just say 268 divided by the number of units, and it looks like we completed 2 units. So 268 divided by 2 equals 134. That is how much it cost us per unit. Okay, so let's work this one. Job WR53 at Northwest Fab Inc. required 200 of direct materials, $10 of direct labor hours at $15 per hour. Estimated total overhead for the year was $760,000, and estimated direct labor hours were $20,000. What would be recorded as the cost of job WR53? All right, so we've got direct materials, and it told us that our direct materials was $200. And then we have direct labor, and it told us that we had 10 hours at $15 per hour. So 10 times 15 is going to be $150 for our direct labor hours, direct labor dollars. And then we have our manufacturing overhead or factory overhead that we need to allocate. So we need to figure out what our predetermined overhead rate is, and then we need to multiply that by actual base. All right, so that formula for the predetermined manufacturing overhead rate is estimated manufacturing overhead divided by estimated base. All right, so let's see if we can figure out what our estimated base is. Estimated total overhead for the year was $760, and estimated direct labor hours were 20,000. So we can assume that our base must be direct labor hours. All right, and so estimated direct labor hours, they tell us, was 20,000, so that's down here. And estimated manufacturing overhead was 760. We didn't have to calculate that fixed plus variable. They gave it to us, so that was nice of them. So we need to divide 760,000 divided by 20,000. That's going to equal 38. All right, so that's my rate, 38, times my actual base. Well, how many direct labor hours did they actually work? 10. So 38 times 10 is 380. And so that's how much I will allocate or apply to this job. So then when we add this together, we can find out that it's $730. Okay, and here's the book answer, and we did get it right, $730. So again, this was a loaded question. We had to know a lot of things. We had to first know that to find out the product cost, we add direct materials, direct labor, and allocated factory overhead. All right, and then in order to allocate factory overhead, we had to know that predetermined overhead rate formula, and then we had to take that rate times the actual base. Add it all together, and we get our total cost. All right, so let's talk about the good and bad of job order costing. So job order costing does a great job of adding direct materials and direct labor to the jobs because it traces them. So it's an exact amount that gets traced to those jobs. But it often fails to accurately allocate the manufacturing overhead cost used during this production process to their respective jobs, because as you saw before, we used estimates for the rate, and then we applied that rate to the actual base. So it's only as good as those estimates that we use. So how can we make it better? Choosing the right allocation base will help us to make this better, make our estimates better. So job order costing systems that use allocation bases that do not reflect how jobs actually use overhead resources are the issue. The allocation base in the predetermined overhead rate must drive the overhead cost to improve job cost accuracy. A cost driver is a factor that causes the overhead costs. Many companies use a single predetermined plant-wide overhead rate to allocate all manufacturing costs to jobs based on their usage of direct labor hours. It is often overly simplistic and incorrect to assume that direct labor is a company's only manufacturing overhead cost driver. If more than one overhead cost driver can be identified, job cost accuracy is improved by using multiple predetermined overhead rates. So now we're going to look and see how we can compute the cost of a job using multiple predetermined overhead rates. Dixon Company has two production departments, milling and assembly. The company uses a job order costing system and computes a predetermined manufacturing overhead rate in each production department. The predetermined overhead rate in the milling department is based on machine hours. All right, so milling department, machine hours. And in the assembly department, it's based on direct labor hours. Assembly department, direct labor hours. Okay, so they have determined that the best cost driver for the milling department is how many hours the machines run. But they've decided that the best cost driver for the assembly department is how many direct labor hours. So we would guess that the milling department is more automated and has more machines being used, and the assembly department requires more employees to actually hands-on do it. So a better cost driver for that department is the direct labor hours. All right, the company uses cost plus pricing and a markup percentage of 75% of total manufacturing costs to establish their selling prices for all jobs. At the beginning of the year, the company made the following estimates. All right, so these are our estimates. Milling department machine hours, direct labor hours, total fixed manufacturing overhead costs, variable per machine hour, variable per direct labor hour. So we've got this information. So step one, we're going to calculate the predetermined overhead costs for each department. So for the milling department, we need to put our estimated manufacturing overhead on top. And if we look through our numbers, we would calculate our fixed costs plus our variable costs to get to 510. That's going to be our numerator for the milling department. The assembly department, same thing, our fixed costs plus our variable costs to get to 800,000, which is our numerator. Next, we're going to calculate the overhead rate. So the amounts on the previous slide, we're going to take those, and this was the numerator, and the denominator was just the given with the machine hours for the milling department and the direct labor hours for assembly. And when we do it, we find out that our rate is $8.50 for the milling department and $10 for the assembly department. Now we're just going to apply that to the actual base. So actual base for milling department will be machine hours. Actual base for assembly department will be the direct labor hours. All right, so when we do this, we will say the milling department had actual machine hours of 90. So we'll say 90 times their rate. And the assembly department had direct labor hours actual of 20. So we'll multiply that by that rate. And then when we get these two numbers, we'll add them together, and that's how much we'll put on their job cost sheet. So the total amount that we need to add to the job cost sheet is going to be $2,485. All right, so now we need to figure out how much to sell it for. The selling price of job 407, assuming a 75% markup, will be the total cost of job 407, and then the markup of $2,485, which is our total amount of overhead that we apply, is $1,863. So the selling price of job 407 needs to be $4,348.75. So it's important to emphasize that using a departmental approach results in a different selling price for 407 than would have been used if we did a plant-wide overhead rate based on either direct labor or machine hours. The appeal of using predetermined departmental overhead rates is that they presumably provide a more accurate accounting of the costs caused by jobs, which in turn should enhance management's planning and decision making. All right, there is yet another option that some companies use, and it's called the activity-based approach. This approach uses multiple predetermined overhead rates, and it is even more accurate to measure the demands that jobs, products, customers, and other cost objects make on overhead resources. It should be noted that it is very time consuming, and the cost must outweigh or the benefit must outweigh the cost in order for a company to choose to use activity-based costing. All right, let's go back to using our rate and applying our overhead. Whether or not we use one base or two bases, it doesn't matter for what we're going to talk about next. So because we estimated how much to apply or to allocate of manufacturing overhead to a job, we will never exactly allocate the right amount. So we're always going to have either too much or too little. We're going to call that underapplied or overapplied. And so when that happens, we have to close out the account and zero it out before the financial statements come out. And so the way that we're going to do that is through a journal entry. Okay, so to illustrate this, I will tell you that throughout the period, accountants would put the amount of manufacturing overhead that was actually spent into the manufacturing overhead account. So it would have, that's a 3, 30, 40, 40. All right, let's say that it has, let's see, 80, 90, 100, $110 in it right now. Okay, so that's how much it really has. But when we did our predetermined manufacturing overhead rate, we used estimates. And let's say that we decided to take out $100 based on our estimates, and we put that into our job. So we actually made a journal entry into our job. So we allocated out $100. So on the left side, we've got our actual amounts. And on our right side, we have how much we allocated. So you can see here that we didn't allocate out all of it. And for financial statement purposes, we don't leave manufacturing overhead on our books. By the time we do our financial statements, we want it all to be allocated to a job. But based on our predetermined overhead rate, we didn't allocate it all out because it was all based on estimates. In fact, we left $10 in. So we had actual of 110, we allocated out 100, so we have $10 left. So what do? Well, we're just going to take it out of manufacturing overhead, and we're just going to assume that it was sold and just put it straight to cost of goods sold. And so in this situation, we were under allocated because we had not yet taken out enough. And so we would look at this one right here. The adjustment for under applied overhead increases cost of goods sold. So here we did it. We increased cost of goods sold. And so if it was the opposite situation, let's say that we did not take out enough, we would have decreased cost of goods sold for the remaining amount. So I don't want to get too into the debits and credits right here. All I want you to know is that we zero out the manufacturing overhead account by putting any over allocated or under allocated, and we also can call that under applied and over applied, to the account called cost of goods sold. Okay. Now let's talk about subsidiary ledgers. So all the company's job cost sheets collectively form a subsidiary ledger. So on our balance sheet, we would have all of these job cost sheets, and any that weren't yet completed would be added together and be called work in process. Any that were finished would be added together and be called finished goods. These are our categories of inventory. And in fact, we have 3. We have raw materials. That's the value of what's in our warehouse that hasn't gotten started yet. Then we have work in process. That's the value of everything that's currently being worked on in our plant. And then once it's finished, it's moved over to finished goods. And then once it's finally sold, we're going to transfer it to cost of goods sold. So the job cost sheets provide the underlying set of financial records that explain what is reported in our cost of goods sold. So once it's sold, all those costs get moved to cost of goods sold, which will be shown on your income statement because cost of goods sold is an expense. All right, so raw materials, work in process, and finished goods are all inventory. What type of an account is inventory? It's an asset. It's something that we own that's going to benefit us in the future. When's it going to benefit us? When we sell it. Once we sell it, it gets moved to cost of goods sold. All right, what type of an account is that? It is an expense. So it is on the income statement. Okay, I always like to look at job order costings in the service companies. So we've been focusing on manufacturing applications, but we can use this, and it is used very often in service companies like law firms, accounting firms, medical treatment. So we could easily say that a job is a surgery, and we would add the cost of the surgery. So for example, if we had a brain surgery, we could add in the direct materials such as the shunt, and then the direct labor such as the people who are directly working on the patient that we can trace to them. So then we would have the direct labor, and then we would allocate all of that overhead based on some sort of driver. And I would think that it would maybe be the driver could be the estimated amount of time that it would take for that shunt surgery. So 1.5 hours would be the estimated base. And so we would then apply the manufacturing overhead. So it could be used in a service or medical treatment as well. So let's think about it in an accounting firm. So let's say that we're doing a tax return. We would add the cost of the labor. And then, would we have any direct materials? You know, if we gave them a tax organizer and it was $5 or something, we could have some direct materials. And then we would allocate the factory overhead based on the estimated amount of time it would take us to prepare that tax return. So lots of different uses in service and medical treatment and law firms for the job order costing. So this completes chapter 2. Let me know if you have any questions.